All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Monday, everybody. I hope you all had an excellent weekend. Today is July 27th, 2026. Our top story this morning, oil is way down as the U.S. and Iran, they just kind of stopped shooting at each other over the weekend. It's not a ceasefire, which is interesting because when we have ceasefires, we don't cease fire. Now we don't have a ceasefire and we have ceased fire. Keep up. Okay. So, yeah, there was all this talk that there was going to be this major escalation, especially on Friday. Everybody was expecting it. A lot of people were theorizing about a ground operation. Thank God that didn't happen. And then the story breaks that we decided not to further escalate, we being the United States. And then there was leaked that possibly the reason why is because the U.S. is running out of interceptors and we couldn't sustain a defensive posture with the Iranian counterattack of such escalation. And then since we didn't escalate, apparently the Iranians chose not to escalate, which is interesting. If the story, if it's true that we don't have enough interceptors to sustain defensive operations, which very well could be true because we've recently licensed the Europeans and the Ukrainians to start building them. So if we really are running short of these things, why wouldn't the Iranians press the advantage? Unless maybe the Iranians are also running low on offensive munitions. And maybe this war is hurting everybody a little bit more than we're all willing to admit. Maybe both sides are, just kind of like putting on a good face. Oh, we've completely obliterated the enemy and the great Satan and all this other bullshit. When really, this sucks for everyone. I'm just throwing it out there. Maybe that's what's going on. But look, as this is all going on, there's no official peace talks happening. There could be notes being passed back and forth through the Jordanians or the Pakistanis like we've done before. But the Saudis and the Houthis, they don't care. They were going at it all weekend. The Houthis have attacked the Saudi port of Yanbu, which is a vital piece of infrastructure. That's where all the oil is being routed westward away from the Strait of Hormuz. Well, now they're attacking that port along with some other Saudi oil infrastructure was hit along the west coast of Saudi Arabia. The Saudis retaliated, targeting Houthi positions in Yemen. So that's the war within the war that's going on here. It was quite a mess over the weekend. I don't know if this current lull in the hostilities lasts. I don't know what it means for the long term. My gut tells me this probably isn't really going to get us anywhere, kind of like the MOU didn't really get us anywhere. But for now, I guess this is what passes for de-escalation, and oil is moving lower because of it. Now, we've also had some other stories involving oil going on this morning. The Russians have resumed oil exports out of their Novorossiysk port on the Black Sea. That was shut down last week after multiple Ukrainian drone attacks caused the Caspian Pipeline Consortium to shut down the flow of oil from Kazakhstan and in the Caspian Sea region all the way to the Russian port of Novorossiysk. That's about 1.5 million barrels a day, somewhere in that ballpark, has resumed loading. So that will also be putting a little bit of downward pressure on oil prices this morning. And we've also got word that Chinese oil imports have risen slightly for the month of July. So that'll put a little bit of upward pressure on oil prices. Remember, the Chinese have really been floating the world here. They cut their oil imports by several million barrels per day, estimates anywhere from 5 to 7.5 million barrels a day, that they cut their oil imports since the start of the war. And really, that has made up the majority of how the world has, or at least the biggest portion of how the world has absorbed the impact of the Strait of Hormuz being closed. Now, in the month of July, the strait reopened, at least for a little while. Oil got through, some doing through various routes, the Iranian route, the unofficial route, the U.S. defended route, whatever. Oil got out in the month of July, and the Chinese bought a bunch of it. So their oil imports rose for the month of July versus where they were in May, which was the lowest in like 12 years. So will the Chinese imports go back down now that hostilities have resumed? Or will the Chinese resume buying, eventually come back up to where they were beforehand, which would mean sharply higher oil prices? Chinese imports has become a vital statistic about the direction of the price of oil. And it's the one thing the oil bulls didn't see coming when this conflict broke out. And nobody, certainly not me, could have anticipated that the Chinese, for whatever reason, would decide to buy 5 to 7 million barrels of oil per day less at the onset of this conflict. Nobody could have predicted that. So I don't know if they do it again. Do they go back to normal, or do they lower their imports again? We'll just have to wait and see. Now, the other big story going on this morning, Nvidia is at it again. This is the biggest round trip since the start of this godforsaken AI bubble. $250 billion. Nvidia is backstopping for a Softbank data center that will be leased to OpenAI in Ohio. $250 billion for one project. So Nvidia, basically through guarantees and intermediaries, is buying $250 billion worth of its own freaking equipment. Nvidia is going to backstop the lease. Basically, Nvidia is going to guarantee that OpenAI will have the money to lease this data center from Softbank. And then Softbank is taking that Nvidia guarantee of cash flow using OpenAI as an intermediary. And then Softbank is able to go out to the bond market and say, hey, lend me the $250 billion that I need to build this project, because if I can't pay you and if OpenAI can't pay me, Nvidia is going to pay all of us. So Nvidia is just buying their own product here. And it gets even bigger, because this is only paying for the build out of the data center and the connection, grid infrastructure and everything else. It doesn't even include the chips. If you include the chips, the number gets even freaking bigger. Guys, this is ridiculous, right? All right. I mean, look, I used to put this thing on as a joke to make fun of the people who told me I was a conspiracy theorist for saying Nvidia is just buying their own effing product from themselves via all these strategic investments. Now the numbers have reached $250 billion in one headline. Are you a-holes ready to take this seriously yet? Or are we going to let this blow up freaking everything? Oh, we have our answer. They already let this blow up everything. It just hasn't blown up yet. You better believe that fuse is lit. See also this paper we have about insurance and what's going on with private credit and private equity towards the end of the show. You're going to have to stick around for that one. All right, what else we got going on? Wheat prices. Watch wheat prices and what's going on in the Black Sea. We'll talk about that one. We've got Bitmart. Who? Bitmart. I've never heard of these guys before, but they're a thing apparently. They are the third crypto exchange to shut down operations in just the last month. No word about withdrawals being frozen at any of them. People are able to get their coins and money off of these exchanges as they're shutting down. So it is far more orderly than the blowups we saw in the last crypto winter, which is encouraging. But the fact that these exchanges are shutting down is obviously not a good thing. The blowups have begun. It's just people aren't getting completely hosed this time. Just a reminder, guys, don't leave your crypto on the exchange. We got CXMT, which stands for something I probably can't pronounce, is the Chinese memory maker. Their stock IPO'd up 466% in one day. You think maybe this memory price thing is going just a little wild? 466% in a day? Just a little bit maybe? Hey, I just throw them out there. Indonesia, that's another one you got to watch. We've got Indonesia's central bank chief has just abruptly resigned. I don't know what is going on in Indonesia. President Subianto is making a mess in that country. We've been talking a lot about the nationalization of all of the natural resources. And in just the last couple of weeks, we have now had their finance minister and their central bank chief have both resigned abruptly. Imagine if Scott Bessent and Kevin Warsh were to resign within a few weeks of each other. You think people would be saying President Trump is nuts? Which they're saying that anyway, and they've been saying it for years. But you get my point here. If the Treasury guy and the Fed guy were to both step down back to back, you think people would freak out? I mean, what's going on in Indonesia, guys, is the Venezuelization of Indonesia. Subianto is doing pretty much exactly what Hugo Chavez did in the early 2000s here. The only difference is Indonesia has 10 times the population that Venezuela has. So this is the next decade's humanitarian disaster in the making in Indonesia as we speak. We got BlackRock's private credit fund CEO abruptly resigned on Monday of last week, and they didn't tell us until after the close on Friday. Isn't that interesting? Blackstone, very sneaky. Your CEO quits, and you don't tell us until Friday when you were expecting everything to start going kablooey in the Middle East. You thought we wouldn't notice that one. Little Friday news dump, but don't worry. When fund co-CEOs quit. That's always a good sign, right? Just a reminder, guys, I have a general rule. Whenever I see co-CEO for anything, I don't touch that freaking company, that fund, that anything. If you have a co-CEO, I've just seen so many firms, banks, and funds blow up involving co-CEOs. Just, I can't get past that. Danger, danger. And last but not least, we're going to talk about this paper about insurance and private equity. Guys, I've been getting a lot of messages. I've been seeing a lot, like Michael Burry is warning about this now. I had two different people over the weekend send me links to this guy I've never heard of before, Rod Dubitzky, who's sounding the alarm. The guy used to work in MBS, and now he's doing buy-side research on private equity and insurance, and he is screaming from the top of his lungs, as only finance guys can do so, about what's going on in the insurance market and the regulatory structure. Guys, it's a bailout in the making. And don't for a second think the AI bubble guys aren't taking advantage of this either. So stick around for the end of the show. Tinfoil hats at the ready, guys. We got a lot to talk about. Let's shrink my big melon of a head and see what's going on in the world of finance today. Don't forget that like button and that subscribe button for the algorithm so you can come back tomorrow and have your coffee with the melon heads, because we do this every day. Right now, the S&P is higher by 64 points, 0.86% to the upside. The market is liking this cheap oil this morning. If you think I'm kidding, take a look at the Dow. 595 points higher, up by 1.14% this morning. And the NASDAQ is also up by 1.28%, 360 points in the green for the NASDAQ. The Kospi, however, has been quiet. It was higher last night by 0.97%. So a little bit higher, but certainly not the kind of volatility that we've seen. Is the Kospi kind of see here? It looks like, we had this big downtrend here. It does kind of look like it's trying to level off a little bit, or maybe it's just a continuation pattern, and down we go. I think we go lower, but it might take a while. Looking over at the dollar's a little bit weaker this morning. Oil is probably driving that as well. 101.40, off by 7 basis points. Bond market is mostly lower this morning. The 30-year yield is off by almost 4 points at 5.125%. The 10-year yield is off 3.5 points, a little bit more than that, 4.643% for the 10-year. Again, oil is driving this drop in bonds. 4.320 for the 2-year yield. That's lower by a point and change. And again, when I say the drop in bonds, I'm talking about the drop in bond yields. This is bond prices moving higher. And the 1 month is at 3.765. That is lower by 1 point and change. Looking over at Bitcoin. Bitcoin is surprisingly lower this morning. That's off by 390 points here, or $390, $64,966. You'd think with tech stocks rallying, with the dollar weaker, with interest rates lower, the oil sharply lower, you'd think Bitcoin would be catching a bid here. Maybe the fact that we've got all these exchanges shutting down is starting to weigh on Bitcoin a little bit here. But my gut tells me Bitcoin has a lot further to fall before we get to a bottom from this cycle. Looking over at the rest of the commodities this morning, spot gold is higher. We're at $4,083 for spot gold. That's up by $30, about 0.75%. It's liking that cheaper oil that much cheaper oil. Spot silver is at $58.84. That's higher by 65 cents, 1.1% in the green. I like this shiny. Copper is higher by 0.56%. Platinum is higher by 1.9%. Palladium is higher by 2.6%. It's good morning for metals. Look at the big drop in oil here. 84.36 for September WTI futures. This was over 90 just a few days ago. We're lower by $5 or 5.5% this morning. So let's talk about what's going on here. This is the big one in Bloomberg this morning. Middle East tensions ease as the U.S. and Iran pause hostilities. Again, that's really all it is. They're just kind of pausing hostilities. There's been no agreement. There's been no peace talks. They just stopped. The U.S. and Iran held off attacks on one another for a third straight night, helping lift global stock and bond markets and push down oil prices. U.S. President Trump, who last week threatened to step up attacks on Iran, is giving diplomacy some space, Mike Waltz, Washington's ambassador to the UN, said on Sunday. The New York Times reported that Trump and his advisors decided to hold off on plans to escalate U.S. strikes, partly because of concerns about diminishing stockpiles of air defenses, such as Patriot interceptors. Waltz, speaking to NBC, said American forces had all the weaponry they needed. Trump has consistently said he prefers a diplomatic solution, but he continues to retain all options if Iran continues terrorist activities in the Strait of Hormuz or against allies, a White House spokesperson said. Iran's army says it has halted its retaliation against U.S. bases and troops in the region as a result of Trump's decision to hold off on the strikes. The Islamic Republic has been attacking the likes of Kuwait, Bahrain, and Jordan near daily in the 2 weeks before the U.S.'s pause on Friday. Still, tensions between the warning signs remain high, and Iran has said there's no change to the status in the Strait of Hormuz, meaning it's likely to continue targeting commercial ships that don't receive its permission before transiting. Traffic through the vital waterway through which 1/5 of the world's oil and LNG supplies flowed before the conflict remains negligible. On Monday, Iranian state TV said Tehran had forced 6 ships to turn around, go through the... Okay, yeah, that's new. Or not new. The U.S. still has its blockade on Iranian ships. So, nothing as far as the flow of oil has changed here. Skirmishes between the Yemen-based Houthis and Saudi Arabia over the past week have also ratcheted up risks for shippers. The Houthis, a militant group backed by Iran, fired on vessels in the southern Red Sea after threatening any calling at Saudi ports. The Saudi-led coalition responded with attacks on Houthi positions in Yemen on Friday and Saturday, leading the groups to target the Saudi port cities of Yanbu and Jizan with missiles and drones. There was no immediate confirmation from the Saudi government or oil giant Saudi Aramco, whose facilities the Houthis say they targeted. You can see in NASA photographs, by the way, that those facilities have been burning. They were definitely targeted. There haven't been any announcements from the Saudis or Houthis about attacks on one another since early Saturday. All right, so we've got this not ceasefire between the U.S. and Iran, and then this undeclared war between the Saudis and the Houthis going. While all that's going, Russia's Novorossiysk has resumed crude loadings after days of halt. All right, remember, you got the Ukrainians were targeting Russian oil infrastructure in and around the Sea of Azov and the Black Sea. That forced the shutdown of the port of Novorossiysk last week. That Caspian oil pipeline, that one was shut down. They have since restarted that. So that's about 1.5 million barrels of oil will now be coming to market, assuming it doesn't blow up in the next 24 hours all over again. So that will put some downward pressure on oil. Now, this one should put some upward pressure on oil. China's crude imports in July set to rise from a decade low. We're going to skip through a lot of this article. I just want to show you this chart here. This shows China's crude oil imports. These are monthly snapshots going all the way back to 2014. And you can see with the outbreak of hostilities in February, all of a sudden Chinese imports just took a dive. They went from as high as 12.4 million barrels in December of last year to as low as 6.2 million barrels in June. All right, and that 6.2 million barrels, that was the lowest amount since the 2015 timeframe. So the Chinese really floated the world here. Now you'll notice the chart is heading back higher. We're back up to 7.8 million barrels for the month of July. So the Strait reopened partially, whatever you want to call it, under the memorandum of misunderstanding, and the Chinese bought more oil. Now we've got the Strait is effectively closed again. What is this chart going to do? Is it going to keep rising or is it going to go down? That will have more impact on the direction of oil prices than anything else. And so it's really hard to know that, because I don't think anybody could have predicted that the Chinese would have done this to begin with. China's crude imports are now the market's key price-sensitive variable, said Lao Na, founder of the Guangzhou-based GL Consulting. While the country's crude demand is recovering, the pace remains relatively modest, constrained by slowing economic growth and government policies aimed at accelerating electrification and reducing reliance on oil. Since the Iran war started in late February, China has cut its crude deliveries by over 5 million barrels a day and reduced refining, efforts that have helped prevent a spike in global oil prices. The market is keenly watching for any rebound in buying, along with a resumption of stockpiling. All right, so the net effect after all of this is, here is your oil chart this morning. These are daily candles. There's the big spike at the onset of hostilities, and then we started talking, we're going to make a deal, we're not going to make a deal. Then the memorandum of understanding, and oil prices bottomed out in June, and we kind of kept shooting at each other, and then eventually we just decided, you know what, the war never really stopped, so let's have the war again. Oil prices started rising, and then everybody just stopped. On Friday, everybody just stopped shooting, and look at what oil has done. Big gap down here. $84, down from almost 94 that we hit last week. So do we hold here? I don't think this is it for this conflict. I mean, neither side seems really intent on ending the war. Nothing has been achieved. Nothing has been settled. There's no clear victor, although the war certainly hasn't gone the way the U.S. hoped it would have gone in the first few days. So, yeah, I don't think I don't think we've quite seen the top in oil. Let's just put it that way. All right, now let's talk about this one. Nvidia is in talks with OpenAI to guarantee $250 billion financing for data center. In honor of all the people who told me I was a conspiracy theorist, a rando, and that my arguments were puerile, we're going to put the tinfoil hat back on, because I just want to remind you guys that it is, according to the mainstream financial press, it is an unfounded conspiracy theory that Nvidia is just buying their own freaking product, right? Those are just the ramblings of some nobody on Twitter, right? Can you guys hear me now? Now that we're up to $250 billion, the project would be one of the largest AI computing hubs and involve power controlled by the U.S. government. Oh, the government's going to give them power. That's nice. Nvidia is in talks to provide a roughly $250 billion with a B backstop for OpenAI as part of a massive data center project, one of the most ambitious financial transactions yet in America's artificial intelligence boom. The guarantees from Nvidia would help the ChatGPT maker lease a 10 gigawatt project that Softbank's energy subsidiary is developing in southern Ohio, people familiar with the matter said. In total, the project could cost more than $500 billion. Hey, $500 billion. It's a nice round number, including the chips that would go inside the data centers. It would be the largest data center project announced to date. The power for the project is controlled by the U.S. government and funded separately by Japan under a recent trade deal. Commerce Secretary Howard Lutnick is involved in deciding who will get the power. Some of the people said, well, that's nice. I guess we're just like any pretense of free market capitalism has now been completely discarded, since this Commerce Secretary will decide via royal decree who will get the power and who will not. Nvidia's backing would allow the data center developer, which is owned by Japanese billionaire Masa Son's investment firm Softbank, to raise debt at more favorable terms than it could if OpenAI had no financial backer. Since OpenAI has no investment-grade credit rating as an unprofitable company, the AI company has been in advanced talks with the lease site for several weeks, people familiar with the matter said. By the way, I got to give a shout out to Ed Zitron. Ed Zitron is a fantastic writer, and he's got a good, very good understanding of the circular financing and the corrupt nature of what these guys are doing. It's very rare to find such a good communicator and somebody who has the business acumen to understand what these guys are doing. And Ed did an interview, I think it was on Bloomberg over the last week, and he made one line that really jumped out at me. He said, OpenAI is a load-bearing company. And I just remember reading that and saying, hot damn, do I wish I had come up with that. That was a really good phrase, that OpenAI is a load-bearing company. Because what happens when you take out a load-bearing wall in a house? The thing freaking falls down on your head. And so what is Nvidia doing here? They are shoring up that load-bearing wall with $250 billion worth of financial guarantees to keep this house of cards standing. That's what Nvidia is doing here. And again, Ed Zitron, load-bearing company. Damn, that was good. OpenAI is among the companies that has shown an interest in the site, while Anthropic, Microsoft, and Google have also spoken to Lutnick about it in recent weeks. The $250 billion guarantee would cover the data center lease and the debt needed to fund its build-out, but not the NVIDIA chips that would go inside it. NVIDIA, which has invested $30 billion in OpenAI, is also discussing a deal to finance the chip purchase for OpenAI, which could total another $350 billion. People familiar with those discussions said such circular funding arrangements have caused concerns that the industry is vulnerable if investor sentiment shifts or if growth slows for AI companies. All right, so NVIDIA is co-signing for $250 billion. And they might co-sign for another $350 billion. Hey, if my calculations are correct, that's $600 billion that NVIDIA is backstopping for OpenAI, that OpenAI obviously can't pay for, because, as the article points out, they lose money, as does everybody in the AI space. And then they go on. I just love it here. They say such circular financing arrangements have caused concerns that the industry is vulnerable. Remember, guys, this is Wall Street Journal. This is the same parent company as MarketWatch who ran the Don't Listen to Randos article. All right? Same freaking company. So 2 years ago, I was just a rando conspiracy theorist, and they'll lead with personal attacks in the headline. Won't even mention me by name. The feigned indignation of Stacey Raskin, that sell-side quack. And now that we've reached, $600 billion, now that this is like a $20 trillion bubble, now they'll acknowledge the circular financing. Hey, way to get out in front of that one, Wall Street Journal. You guys are doing really, you're doing good work over there. All right. We got to talk about this one too. What you are looking at here is a cargo vessel sinking in the Black Sea. This is the cargo vessel that was hit by multiple Russian cruise missiles that was carrying Ukrainian grain off the coast of Odessa last week. It finally sank yesterday. This one was posted by OSINT Technical. By the way, that OSINT Technical is an excellent feed on X that I highly recommend. So why is this so important? Both sides are now targeting grain shipments, the grain haulers. The Ukrainians are blowing up Russian grain haulers. The Russians are blowing up Ukrainian grain haulers. All right. And this is important because you got to look at the chart of wheat prices. All right. Everybody remember, like, wheat farmers were like the new early adopter crypto bros back in 2022 when wheat prices went vertical. Well, look, here these are daily candles for wheat futures. All right. This is what wheat did in the early onset of the war between Russia and Ukraine. Wheat went absolutely ballistic. And there was worries about global starvation because of disruptions to grain shipments caused by this war. And shortly after, they established, they started the talks. Wheat prices started to come down when they announced that the Russians and the Ukrainians, through intermediaries, were going to figure out a way to let grain shipments go. And then they signed the Black Sea Grain Corridor understanding, and wheat prices came right back down. All right, and that was pretty much it. That was the high of wheat prices. They've traded lower to sideways ever since. Well, ever since the Iran war started, we've seen wheat prices have started to climb, and now we've got Ukrainians and Russians are shooting at ships again carrying grain, which means the Black Sea Grain Corridor appears to be going the way of the memorandum of understanding between the U.S. and Iran. And if that's the case, that doesn't necessarily mean wheat prices are coming all the way back up here. But it does mean that the reason the wheat prices went this high could be coming back. So keep an eye on food prices, guys. Grain prices in general. I'm zeroing in on wheat here, but this also applies to soybeans and it applies to corn. If they keep hitting those grain haulers, we're going to see sharply higher wheat prices. And remember, when it gets too expensive to eat, people get pissed off and you start to get riots all over the world. It starts in the poorest countries, but it spreads from there. All right, let's talk about what's going on in crypto here. Bitmart shuts down after 8 years. They are the third crypto exchange to close this month. Bitmart has already stopped accepting new registrations and deposits, and all trading services will be shut down next month. Bitmart opened its doors nearly a decade ago. On Sunday, it told users it was closing them. The third crypto exchange to announce a shutdown in 2 weeks, and the third this month alone. Bitmart announced on Sunday it would start phasing out its trading platform. The exchange referred to its operating conditions, market environment, and future strategic direction without elaborating. New user registrations, deposits, and trading orders were suspended at 9:30 p.m. Eastern Time on Sunday itself. The futures accounts have entered reduce-only mode, and copy trading, grid trading, and API services were being phased out, the announcement said. All trading services will cease on August 26th. And the platform will officially close on January 31st, 2027. The exchange also said that withdrawals were still open, but would take longer to process as identity verification, compliance checks, and blockchain congestion were taking their toll. All right, so they haven't frozen withdrawals, but they're slowing them. Don't be the last one to get your money off of this platform. If you use it, I seriously doubt any of my guys use this platform, but if you do, don't be the last one to get your money out. Bitmart became the third centralized exchange to announce a shutdown in 2 weeks, following AscendEX, which closed on July 1st, and BitMEX, which announced its closure on Thursday. It has also resulted in the shutdown of over 30 crypto projects in 2026, including exchanges, layer 1s, layer 2s, and DeFi protocols, according to an analyst, something I can't pronounce. Mid-tier exchange model has a fatal flaw, and needs a constant flow of new users. And when that dries up, the business fails, said Simon Dedek, founder and managing partner of Moonrock Capital. According to him, this marked that the markets were actually healing. And I do agree with this. This doesn't mean the markets are healed, but this is the dying flesh being excised from the wound, if you will, or the rotten flesh. I mean, these exchanges shutting down. We see stories like this every crypto winter. And the one thing I could say, as much as, this isn't exactly orderly, 3 crypto exchanges shutting down in 2 weeks, it is certainly much less disorderly than it was back in 2021 when these crypto platforms were blowing up left and right, ultimately culminating with the FTX collapse. So it's not that bad yet, but keep an eye on this stuff, guys. And again, don't leave your crypto on the exchanges, not your keys, not your coins. All right, we've got chipmaker CXMT has rallied 466% on its market debut surge, makes it the most valuable China-listed company. All right, and that seems like a perfectly rational headline, that the most valuable public company in China IPO'd yesterday, and that it rallied almost 500% on its first day of trading. All right, that's it. That's the story right there. Do you think maybe volatility much? CXMT is a memory maker. Apple is currently lobbying the U.S. government to let them buy memory from CXMT. That's how Apple's trying to get around the Samsung SK Hynix Micron shortage. This is just another extension of the AI bubble. It's reached a Chinese IPO now. All right, keep your eye on this one. Indonesian central bank chief Warjio unexpectedly resigns. Something nasty is brewing in Indonesia, guys. Bank of Indonesia Governor Perry Warjio suddenly resigned for unspecified personal reasons, wink, wink, tinfoil, unnerving investors who had viewed the central bank as a stabilizing force in an economy whipsawed by the policies of President Prabowo Subianto. Indonesia's currency, stocks, and bonds all fell after State Secretary Prasetyo Hadi announced the resignation at a briefing in Jakarta on Monday. Senior Deputy Governor Destri can't pronounce him, will take over as acting governor. Warjio didn't attend the briefing and didn't immediately respond to a request for comment. All right, so the central banker is resigning, and he didn't even go to the press briefing announcing his resignation. In other words, the guy's fired. He was in Singapore as recently as Friday to attend a gathering of regional bank chiefs, and then he suddenly resigns on Saturday. With the earlier resignation of Finance Minister Sri Mulyani Indrawati, Indonesia has now lost the 2 key personnel most well-known to investors and widely credited for helping turn around the nation from one of the so-called Fragile Five to one of the most promising emerging markets. All right, so again, with this finance minister leaving, the only comparison I can make here is that this would be like the Treasury Secretary Scott Bessent and the Federal Reserve Governor Chairman Kevin Warsh resigning within 2 weeks of each other. I don't know what the hell's going on here, but this president is also nationalizing all their commodity exports. All their big companies are being brought in. Guys, this is almost identical to what Hugo Chavez did in Venezuela in the early 2000s. And look, Venezuela turned into a humanitarian catastrophe after Chavez did that. It was a slow motion train wreck over the next 20 years, culminating with the U.S. Maduro raid just a couple of weeks ago. And Indonesia has 10 times as many people. There's something like 288 million people in Indonesia. If this goes the way of Venezuela, this is going to be a humanitarian freaking nightmare. There's still time to stop this nonsense, what they're doing in this country. But, man, this is scary what they're doing in Indonesia. All right. Blackstone private credit fund co-CEO Jonathan Bach resigns. The story is not that he resigned. All right, the story is he resigned last Monday, and they didn't tell us until Friday. They tried to sneak this in there with the Friday afternoon war that everybody was expecting. Blackstone, this is the same Blackstone that froze withdrawals in their B-REIT commercial real estate fund for like 2 years. They wouldn't let people have money out. The redemptions in the fund are gated like they are with everybody else. Co-CEO, big red flag. This co-CEO was also the CEO of the BlackRock Secure Lending Fund, not just the BCRED fund. So this guy was CEO of 2 of their funds. Also, the COO of this fund had also resigned recently. This is not a good thing here, guys, and they tried to hide it. Again, they didn't do anything illegal, They just waited 5 days and they snuck it in after the bell on Friday when everybody was expecting bombs to be going off in the Middle East. So very clever, Blackstone. Very clever. Guys, be careful. And here's one reason to be careful. We got to talk about what they're doing in insurance. Now, this is in SSRN. This is a paper that was written by somebody named Andrew Granado at the University of Texas, Austin School of Law. Private Credit's State Backstop, How Private Equity Socializes Risks Through Insurers. And I got a message over the weekend from somebody who was concerned about the insurance company with their annuity was with. I look up that insurance company. I find out they were bought out by a private equity firm last year, that there was a whole bunch of changes in the C-suites after that. I found out they're using private label credit ratings agencies to raid their garbage debt. I mean, guys, there is so much shady things going on with private equity and the insurance companies right now. This is one of the ways that they are offloading their toxic assets onto everyday people. And I'm just going to read you a little bit from the abstract here. Private equity firms have acquired large life insurers and loaded their balance sheet with private credit assets that are opaque and difficult for regulators to value. We've been talking about this for over a year on this channel. The article explains how PE profits from these insurers while shifting the resulting risk onto competitors and taxpayers. Unlike ordinary firms, life insurers do not pass through bankruptcy when they fail. Instead, when a life insurer becomes insolvent, state-based guarantee funds protect insurance policyholders by assessing survivors' insurers to cover the shortfall. In most states, such outlays are fully creditable against state premium taxes over time, transforming an ostensibly industry-funded system into a public backstop. In other words, a taxpayer bailout. The result is a system that socializes losses more sharply than banking's FDIC, and does so with an insolvency and regulatory architecture that is more fragmented and less able to address macroprudential concerns. Because every state has their own insurance regulators, instead of just a single federal entity that sorts through the bankruptcies, every single state starts fighting over their different regulatory frameworks. It is a nightmare, and ultimately the taxpayers take the hit. With the rise of private equity's new private credit strategy, insurance's unique insolvency, tax, and financial regulation regimes now form critical components of private credit's submerged legal infrastructure. Guys, this is how the taxpayers are going to eat it when they're ultimately going to eat the private credit, private equity bubble when it goes, is because they've transferred all this risk to insurance companies along with mutual funds and IRAs and pension funds. All right. They've transferred all this toxic shit onto the retirements of people or the life insurance of people, and the bailouts have already been written. It's gross. And I've got Michael Burry's now talking about this. This guy, Rod Durbitsky, did a great interview on Ox Talks, another YouTube channel, last week about this. I'm seeing more and more talk about what's going on with insurance and these private equity dirtbags. Guys, they're not doing it. They've already done it. That's the thing. They've been doing this for years. But again, I'm just a paranoid conspiracy theorist on Twitter. So, what do I know? I mean, now that it's too late to do anything about it, maybe now we can entertain the possibility that this nobody guy was right about it. I just throw them out there. You guys do what you want with them. Hey, guys, I just want to say thanks for having your coffee with us this morning. Don't forget the like button and the subscribe button for the algorithm. Thank you very much to my magnanimous melonheads on Patreon, YouTube memberships, and Buy Me a Coffee who support the channel. You guys are awesome, and there's links down below should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.